Good. Guys, we've got we basically, whatever we've faded off the last couple days, we're back at it. So we've broken over our kind of previous high. The market's up 4% on slightly better than expected CPI numbers. We came in at a 7.7 instead of a 7.9, which is, obviously pretty much the same thing, but any improvement will always be an improvement, right? So in terms of the overall structure of the market, we've been in a range for a while. We still are in a range. Today will be tricky, but there's not that many instances where you catch like really easy longs when the market is gapping up like 4%, 4.5% almost. That's going to be we're going to need basically a pull to, like, let's just say we'll make up a number, but not make up a number, but I think probably your 270 zone. Unless you get a pull down that way, you're not going to get anything that is too juicy. This is like, we're going to be really tough to chase up. Like if you see here, like, right, most stocks, all these tech stocks are, even though they got room to run, quite a lot of room to run, right? You can't chase them up 12%, 13% at the open. You'd need probably, right, even maybe a below a 9 EMA pullback, possibly. So we'll see what's going on. Let's take a look at the earnings plays. There are stocks. So obviously you're not going to be able to just digest and see what has, just by looking at the gaps. You won't be able to figure out what our earnings plays today because everything is gapping. So we'll have to physically kind of go through and see like what stocks have, right, specifically earnings. Does anybody know the fucking date? Oh, yeah, here it is. Hold on one sec. What is the date? 10-10. All right. Let's take a look here. See if there's anything juicy, because everything's going to show as a gapper, right? So like normally you would just search for the gaps, but you can't do that today. So let me just see if there's anything juicy over here. Junk, double junk, triple junk. And there were some last night too. Oh, that's a blast from the past. And Ralph Lauren. You see some of these like Mogo, some of these things are starting to move around a little bit. Whoa. These jumps. Jump. Hot PDS maybe. Warby Parker's IPO. So this DVS has got a 13% gap. It's a breakout on the daily chart too. All right, so like something like that, like if it has enough liquidity, can follow through. Warby Parker, I don't know if this will ever have any. I did 3 million shares yesterday. It may trade out a little bit thin, but that's like usually the type of thing that you want to, at least in a bull market, if you have an IPO stock that's got a big base and it actually trades thin. Like, in bear markets, we don't want thin, but in bull markets, thin is actually good. Sometimes those are the ones that get pushed around quite a bit. We're just not in that market scenario. Lev, Junk, and this company always moves a little bit on earnings. HIMX, Yeti. So you can see Yeti's got a big push already. I think that's probably something we add. Nothing like buying I had a $300 cooler. Six Flags, man. Six Flags is a magical place. We have WeWork. Let me see what this WeWork. Like WeWorks is probably something that could be squeezy. It usually does 5-10 million shares of volume. I'd add the WeWork. NIO. Wix usually moves really good on earnings. Adjusted loss revenue rises. It's like, some of these like a little bit beaten down, right? Beaten down China names. Now we don't know. Every stock is gapping up 10%. So we don't know if NEO's gapping up based on its earnings or just based on something else. Wix always moves pretty good on earnings too. We've traded that quite a few times. Wix swings in on gap earnings, revenues rise. Like that's probably something that should have some range on it today. You can't chase it up, obviously, that high, but that's going to be something I think we can add. It may trade a little bit thin, but we'll come in like maybe 30 minutes in a day and see if the liquidity is there. Got it. All right, cool. So we got a good gist of what's going on here. Rivian also. Right, Rivian had them yesterday. Now this daily chart's like in a little bit of a mix of no man's land. So you do got to be a little bit careful. Like, yeah, this one will be a little bit tricky because you're like kind of busted into resistance here. But like that one does always have some range. We'll keep an eye and see if we can kind of dance around the things. BYND, Beat Your Meats. They've got minimal gap here so far. This has also got probably high short interest. It's been beaten down since the 250s or whatever. They actually missed on their revenue by quite a bit, and they missed on their EPS by quite a bit too. So usually like when people miss on their earnings, it's always like by like 1 or 2 pennies. BYD missed by like fucking 50 cents. That's hot. That probably makes it a long. Let's add that. I like that too. What was the other one we had? You also. You adjusted loss expands, revenue rises, sets up revenue guidance, blah blah blah. This thing has been like straight. This was $200. Fucking A, right? And even just a couple months ago, right? It's been 58. It's been going down like literally every day. So who knows? Like this might be one of those kind of beaten down names. Now this particular setup, like because of the location on the daily, it often can be a rollover too, right? Like fucking TTD gapped up and pushed right into the 9 EMA and then fucking rolled over the rest of the day. So you do got to be a little bit. You got to be a little bit careful on this kind of setup when it's like you're not clearing the base because if the market just pushes back, then it may just if we're still in liquidation mode, then it may do that. Now it doesn't feel like that yet, but it never really does. So you can add that with the caveat. This is probably a little bit more tricky than some of the other ones. Let me check Bumble. The Bumbler. Dude, how is like the whole world not just using this all day, every day? I can't even count how much money I spent on those boosts. Now, this one it's a little bit of a weird one. We'll take a pass on that for now. All right, let's take a look into the regular watch list. First of all, let's add in, just go over some short squeeze type of plays, right? Things that may move above and beyond, what we're thinking, right? Because if you think about like, today, if we're trading like large cap names, right? Like Tesla's up 13 points, Meta's up, right? 6 points, so on and so forth. So you may not get that, like, you may not get the easy happy-go-lucky range on the ATRs on some of those mega caps. So we may have to look and see, all right, have we got anything else that's trading around? So BYD is actually the number 1 shorted stock in the country. BBWs is number 2. This one's a little bit weird, but you never know. Like sometimes this gets picked up. UPST is number 3. They had their earnings out yesterday, and they actually, it handled the gap down and started to drift up most of the day and had a big range. So I think This we can actually keep playing for a little short squeeze play. CVNA's got room up to 10 before you really run into any kind of resistance. These are all junk. You know, W could be one. Junk. These are all garbagios. Mostly because they're going to trade too thin. Maybe Spaceballs. You know, Spaceballs has actually been holding up okay. And it does have enough liquidity to trade. I'd probably add Spaceballs in. Lucid could be it too. You know what? And like if Rivian's starting to cook today, you know, maybe Lucid comes back into this gap. All right, cool. Let's look into the regular watch list here. Yeah, I'm just gonna kind of put this. I'm just separating by percentage gain right now. I think these kind of names here that have been anything that's been really cut in half, you know, in the last week or two is going to be a good candidate for us, especially if the earnings are out of the way. These solar stocks have reacted well. SPWR, this gap was on earnings and it's been trending up. Airy had its earnings out yesterday. Watch this break of the previous day's high. This will be clean. When you have stocks that are clean, where you don't have to dodge too many booby traps because there's too many levels of supply on top, right? Moving averages, price resistance, all this stuff. Those are easier traders for most people. Now we're gluttons for punishment. We like to make everything difficult, or we're just lazy and we trade some of the same names sometimes. But this is like these type of setups when you don't have any booby traps ahead. Yo, my net went out. It's back. Let's go back into this. So we want to keep a couple of these solars on. Right, you got SPWR, EMPH, FSLR. Yeah, this one looks probably the cleanest out of the group. It is a little bit of a, it's got a $10 ATR on it. It never seems like it does much, but then you look at it, you're like, oh, fucking move like 8, 7, 9 points. Yeah, I'd keep a couple of these. I'd keep 2 of these solars on. This is probably the cleanest, ENPH also. And then, frankly, a couple of the cheaper ones like Run and SPWR, just easier to trade because there's no spread and right. It's always a little bit harder to trade something that's like $150 than something that's $30 for the most part. For the average layman. Junk. Yeah, Meta Nations and the Gap. Look, this is all, they're all going to move the same way. Like we see this, like it's more just a matter of what percentage they move. They're all showing the same thing, right? So some could move 6%, some could move 13%. That is more due to price and float than necessarily the setup, which is all going to be pretty much, it's all going to be the fucking same. Shit, look at that thing. I sold my QQQs at like fucking 270, 250. Fuck. Should have just kept them. Yeah, let's take a look at these semis here. All right, you still got a range break here on AMD. And then, you know, NVIDIA's right, the same thing. You have this kind of these levels to trade around. So this is probably like if you were going to go for a quick flip for the short, you know, probably you do it right around NVIDIA 148, you know, for if you're going to do for like a little bit of a gap fill or something like that, Armando. and like let it spike up at the open and then, kind of fizzle it back out. I think there's nothing for us to do at the open, most likely, unless you want to try for the quick fade. But I would make sure you get into these levels first and then try to do it. And even then, it really could just be like a 10-minute trade, 15-minute trade. You don't really know how deep, we pull anyways. Statistically, like since we've had this chat room, I just will make this word to the mention so they don't be complaints after. We typically lose on these gap days. I don't really recall ever fucking smoking one up. The only time that we win on these big up gap days is when we actually fade them. But when it's like an obvious fade, like you're like in bear market and you gap up on some fugazi news and then you fade it. Otherwise, this has been the trickiest setup around. Was what are you supposed to fucking do with the Qs up this high? So just be careful. Ooh, Bros has got a great name too. You guys, my net's been cutting in and out, so just a little word to the wise. Nice. Let's fucking shred. You know what we got to do? Take it easy at that open. Everybody fucking loses on gap days. This is the biggest one we've seen in maybe ever. I can't recall a 5% gap. Let's do this. Fuck it. We figure it out.